join us on our first investment workshop, which focuses on fundamental analysis. So the first part of a series of investment workshop is brought to you by the Malaysian Chamber of Commerce, Hong Kong and Macau. Just to share a little bit of background information about the investment workshop, the aim of this series of events is to aim to equip Malaysian students who have little to no knowledge in investing with some investment knowledge, and therefore instill some confidence and courage to get you started in investing. If you have already started investing, we hope you could also benefit from these workshops and be better equipped to invest better and increase your portfolio size. So now some housekeeping matters. As with all the Malaysia Chamber events, let's take a photograph together. It's okay if you choose not to switch on your video, just quickly take a screenshot. So maybe Xiaomin, can you help with that? Thank you. So maybe 1, 2, 3, smile. All right. Okay, so I think we're done with the screenshot. Well, next, a brief rundown of the session today is firstly, we have a sharing by our speaker, Mr. Ghee, which is followed by a series of Q&A. If you have any questions during the workshop itself, please drop them in the chat box. We will answer your questions if time allows. So now all the admin, logistic, and housekeeping matters over, I would like to open today's investment workshop with a famous case study. So if you had invested $10,000 in Berkshire at the start of 1985, for your information, Berkshire is the company in which Warren Buffett is the CEO. You now have $2.4 million. But with the same money, 10,000 USD, if you have invested in S&P 500, which is the index fund of the top 500 public listed companies in the US, it would only be worth about 227,000 US dollars. So how do we know which stock we should invest in? Here we turn to our speaker today, Mr. Ghee. So Mr. Ghee is currently an analyst at the Institute for Energy Economics and Financial Analysis. He worked in equity research from 1995 to 2019. His work focuses on mainly commodity and mining stocks. He previously worked for ABN AMRO, Citigroup, Cazenove, UBS, BNP, and Jefferies. So without further ado, I'll hand the time over to Mr. Ghee. So Mr. Ghee, could you kindly share your screen?
Yeah, let's do that. Give me a minute. Okay, share screen. Okay, share. Right, let me just get to from the beginning. Okay, everything okay, yeah?
Yes, we can see your screen.
Right, so guys, yeah. I'm here today to talk about fundamental analysis and how we're going to start investing. Okay, so what is a share price? The share price tells you what the company is worth. So there's this iron ore company, it's 25 cents Hong Kong. It issued 1.1 billion shares. So the market cap is 7.1 billion multiplied 25 cents. Okay, so that's what your company is worth, right? So what is Sang Hong Kee Properties worth? What is Chong Kong Investment worth? Same formula for any company. What is Google worth? Same thing, okay? So what is the most common measure of a share price? Because a share price can be anything you want. It's actually the easiest is the earnings per share, and it's the easiest to understand, and it's always the one that kind of works, right? So it's basically the earnings per share divide your share price. Okay, so in the case of IRC here, the net profit was 780 million Hong Kong. The EPS is 11 cents. So the PE ratio is 2 times. And then for an internet company, your PE ratio is normally 100, 200, 3,000 minus, call it whatever you want, okay? That's a reason for that, and we're going to talk about it, okay? Moving on, what is fundamental analysis? It's the profit of the company, the cash flow, debt level, and growth prospects. Okay, the profit means you're actually making money, and for those accounting students, you know that that's not necessarily cash flow, okay? So if you're old-fashioned, companies that make money should have higher share price. Sometimes the profit is from one-off events. You sell a shopping mall. Very happens a lot in Malaysia. You sell a shopping mall, or maybe because nobody's renting because of the virus, your shopping mall valuation goes down by 20%, right? So sometimes profit has all these non-cash concepts, so you got to keep that in mind. Cash flows from a core business. If you sell more iron ore at a higher price, you have a higher cash flow. What do you do with the cash flow? You use it to repay the bank. Why do you borrow money in the first place? Because it's better to use somebody's money than your own money. So in the case of IRC, at the end of 2020, the cash was 20 million Hong Kong, 20 million US. The debt was 182. So the net cash is 162. So basically, if the bank were to call in the loan tomorrow, they still owe the bank 160 million. So a net cash company is the company that has more cash than debt. Okay. So fundamentally, investors would prefer a company that's cheaper. It has a high cash flow and low debt levels relative to net assets. That's what some investors like. And it kind of makes sense. Okay. But companies with low valuations normally have very poor growth prospects, or they're having growth prospects that will not sustain. So people are not sure whether they want to invest in these companies, and that's why the PE is low. Okay, moving on. So there are certain broad categories of stocks, and they all behave differently. Banks, property, and financials. Low valuations, a bank can't be worth too much, but market goes up, they go down, market goes down, they go up, so I've never invested in banks. I probably never will, because it's just something I don't understand, and I'm not comfortable taking a risk on a bank. Some of my friends who are bank specialists, they tell me it's the best thing since, roti canai, but I don't know. Okay, it's just too hard. Commodities, there's something I understand, I can talk a lot about. Basically, oil, whatever, prices go up, prices come down. You just got to buy when the price goes up. You can collect it on the way down, but you can end up waiting 3 or 4 years, maybe more, right? So that's one way to look at cyclicals, right? Get in when the time is right, and get out if you don't want to sit around. Industrials are companies that assemble these commodities, so somebody who makes cars is an industrial, auto is an industrial. Right now, auto is very hot sector. We can talk about that afterwards. Technology is always hot. Technology includes, iPhone makers, component makers, hardware, PC sellers, software, internet, apps, app advertising. I mean, anything you want is basically a technology company. And technology is very interesting because it's the future. And if you have cutting edge technology, your share price would just go through the roof. I mean, if you bought Apple in 1999, congratulations, right? I mean, that's how it works, right? If you bought BlackBerry in 1999 or Nokia, less, congratulations, right? So, it all depends. Consumer is very tough because right now we have the virus. In the old days, consumer before the virus was very hot, but sometimes consumers are interesting. Luxury companies, valuations are very good. Casino depends, sometimes Macau goes down, sometimes it goes up. Right now, because China can go, so the valuations go up. Medical and pharmaceutical, very hard to understand. I do have some friends who are in this line, so I do ask them for advice. If you have a portfolio, having 1 or 2 of these medical stocks, not a bad idea. Okay. So let's move on from there. How does a company make money? So if you want to understand investing, next time you go to a restaurant, you go to a departmental store, and you ask yourself, how do these people make money? Provide a service. What do you charge for the service? So if you're selling iron ore, that's a global price for iron ore, right? So you can't say my iron ore is going to be cheaper. It can be cheaper, but it can be more expensive, but it depends on the buyer as well. But there is an open exchange price, right? For tech companies, it's subscription. If you're software, sometimes is the churn. If more people use your app, then you get a churn. Depends on the provider. So you need to figure out how do companies make money, right? Then the question is, how much does it cost for them to provide the service? Big issue, right? That's also a big issue to consider. And then for commodity tech companies, it's normally production costs. And then for consumers, it's advertising costs. That's a big problem. If you run a shop, rentals, a big problem. Very competitive. There are some restaurants, I mean, if you walk around right now, if you go to a Malaysian restaurant, chances are people are queuing up because we all can't go back to Malaysia or Singapore, right? So what is competitive outlook, right? Is company a market leader, or will it be bought out, or will it fail? So fail, the stock goes to zero. If it gets bought out, the stock is $5 today, somebody will pay $10 for it, right? So it depends on what price you bought it at. What are the valuation drivers of the company? Well, the most important thing is what other people are paying for the same company. So if iron ore people are paying 5 times, then your company should trade 5 times. And then how attractive is the sector? 2001 to 9, nobody wanted internet companies. Everybody wanted commodities. 98 to 05, nobody cared about Apple. It was all about Dell. I mean, my goodness, who even remembers Dell? Nokia, BlackBerry. So everything changed. That's why technology investing is very difficult. You got to stay on top of it. So companies with no profits can get high share prices. You're like, how does that work? Amazon, best example. Okay, they were loss making for the longest time. In those days, people still go to Barnes and Nobles, Dimmocks, if you're in Australia, or Borders, if you were in Singapore, and then all of a sudden, people just buying books online. People don't even read books, So it's all changed, right? But for every Amazon, there's a Boo.com. Boo.com used to sell designer wear. They were a bit ahead at the time. Netscape was a competitor to IE, Now you got Chrome, IE's on the way out. There was Gateway Computers, they assembled computer parts from Taiwan, and then they marketed, it was kind of cute, it was the Gateway cow, he did it in the barn. It was a bit of a fad, and it wasn't going to last. And Dell was the real company because Dell actually had huge scale, right? I think Gateway was the first to sell online. You can go online and pick your computer, whatever chips you want to use. But that's all in the buy and buy. So sometimes business models work, sometimes they don't, or sometimes they work for a short time. So what is the investment strategies? Buy and hold. That's what your parents would have done. Sometimes you can do that today. I would say a lot less today than before, You buy a great company, it goes up 5 times, congratulations. But you may be able to find one of these companies every year, one, okay? So you don't buy Tesla at 900 and hold, I mean, you can go to 400. We all seen that, right? So, okay. And then there's swing trading. Swing trading, one of my friends does that all the time, but it's very tiring. You buy at 10 cents, it goes to 13, you sell. It goes back to 11, you buy, it goes to 14, you sell, But you don't have time to do anything else. You're on your phone the whole time. Technical trading is, one of my friends does that as well. A different guy, very difficult. He was a prop trader for many years. So he would read the chart, he would know exactly where the stock is going, and he would try to lock in his profit. He's very, very good, but he does this for a living, and he's in his 50s. That's why he's very, very good, okay? What are the don'ts? Do not margin, okay? Whatever you do not margin, please, okay? Don't use money that's not yours. Don't ever, ever do that. That's how you go bankrupt, okay? You buy, if you can afford 10 shares of Google, you buy 10 shares of Google, okay? Google goes up 10%, you sell your Google. The money belongs to you, all right? Don't get emotional. Just because you lose, don't look at the stock price. I mean, the fundamental of the company, you buy a business, you understand the company is making money, the share price goes up 10%, goes down 10% from where you purchase it. You can either average down or you wait, okay? Because this company is making money, they're making a car that people are buying, they're selling ice cream that everybody wants to eat, hang on to it, okay? Don't get emotional. Just because a share is down 30%, don't sell. I mean, that's one of the hardest part of investing, okay? And it's going to take years for this topic, so let's move on from there. And that's the end of the presentation, Pui Ming. So there you go. I'm going to stop sharing right now and hand it over to you.
Thank you, Mr. Gee, for laying down the groundwork, sharing about investing strategies, talking about different industries. We had some understanding, brief understanding of the different stocks that's available in the market. So maybe we'll jump into the Q&A session to ask a bit more, so that you can share your thoughts on some of these questions. And for participants who are still in the Zoom meeting, if you have any questions, please drop them in the chat box. We would also be looking through your questions, and we will ask your questions if time allows. So the first question I have for you, Mr. Gee, is what would be a suitable strategy for a beginner to start with? Because you mentioned about swing and hold strategy. You mentioned about buy and hold strategy, swing trading, and technical trading. So what would be a suitable investment strategy for a beginner who has no experience in investing?
Well, the first question is okay. The first question you have to ask is how much are you prepared to lose your capital? That's the very first question you could ask. Okay. My capital is $1,000. I don't want to lose a single cent of that. Then there are certain stocks you buy. Okay. Sometimes you lose 5-10% of capital. But when you buy a stock like that, um, when you buy a stock like that, you you will only make very limited upside. Okay. And you say why? And you say that's the way the world works, bro. That's the way the world works. Okay. If you want to buy a stock that has no downside and you only want upside, then I'm sorry, you've come to the wrong presentation. There are other presentations on that, but that's not this presentation. Okay. So let's not be unrealistic here. So you buy Hong Kong Electric at $28, the share price goes to 26, you get $1 of dividend, share price goes to 29, so you make $2 on $28. But the $28 is not gonna go to 14. Okay, that's how stocks work. So if you're a real beginner, the first question is how much do you want to lose your capital or put your capital at risk? Okay. If you don't want to lose your capital at all, then my advice is go buy bonds. All right. Buy AAA rated bonds. They'll pay you 2-3% a year, but you never lose your capital. Okay. So that's where you go. If you're prepared to lose your capital and take some sort of risk, then there are many strategies you can put in place. I mean, right now there are some themes running through through the investing world. I mean, the first one is container shipping rates have gone through the roof. All the shipping stocks, their share price have tripled. And, a lot of things happened. You had the Suez Canal, Taiwan disaster. And then you had a situation where people are not buying, Asia is not buying stuff from Europe. So the containers coming back empty. And then in the years prior to the virus, I mean, imagine, right? Number of flights around the world have gone down, what, 80%, 70%, domestic flights in China and US, okay, right? Europe, okay. But you're down 70%. So the amount of cargo on the plane has gone down 70%, right? So if you want to send something to anybody, you've got to send it by boat, right? And then people were getting rid of boats the last few years. So there's not enough boats to go around. And then all of a sudden, everything's gone up because of the virus. I mean, the virus is an event that cannot be predicted. So, these are all the issues. So if you buy a shipping stock, Costco, for example, it went to 17 and went down to 12, and then it's now at 19. So your capital is always at risk. But depending on where you get on, you can make a lot of money. So first question you need to ask yourself as a beginner, how much am I prepared to risk my capital? If you don't want to risk your capital, then you're not going to make a lot. If you're going to make a lot, you're going to risk your capital, you could lose a lot. That's how the stock market works. Hasn't changed, never will. Yeah. Okay.
Yeah, you did mention about that you have to try to buy the company that you understand. So would you also recommend that as a like first step or the
Yeah,
investment strategy for beginners?
absolutely, absolutely. I got one of my daughter's friend to buy Sasa Cosmetics
Yeah.
because she's obviously female. She understands the cosmetic business.
Mhm.
And then at one stage, Sasa went from $4 to $1. She bought at $1. I think she's up about 40%, 50% now. Who knows? And I told her, I said, Sasa initially when the Chinese tourists didn't come, Sasa's business disappeared. They had to unwind all their expensive rentals, big losses. They had to fire their staff, horrible things to do. But once there's a price for everything, okay? Once all the risks are in the share price has gone from $4 to $1, then when they start renegotiating the rents, and then I mean, there's a growing industry of people smuggling or sending cosmetics across the border.
Mhm.
Professional buyers. So they've got a way to do it. I don't know how they do it, but I can recommend you someone who does that. And then all of a sudden there is demand for Sasa, right? So it's definitely worth more than $1. So the market is trying to figure out how much Sasa is worth. So the stock goes up. Cathay Pacific, good example. Cathay Pacific, $15 went down to 5. People are going to go bust. They had to close Dragonair. And then all of a sudden, sometimes flights are resuming here. If there's a bubble with Singapore, the price goes up. So it all depends, right? So the market is always changing every day, and there are new events every day, and people are trying to figure out how much the stock is worth.
Yeah, so it's a good point you mentioned about buying company stocks who which we have seen in Hong Kong like Sasa, Cathay Pacific, even big brands like Nike, Adidas, Skechers, for example. So besides using these brands ourselves, is there other ways that we can try to understand these companies a bit more?
Well, you've got relatives and friends. If you've got a guy who does a restaurant business, ask him how the restaurant business works, right? You got a guy who's a shipping expert, ask him how the container business works. Um, you got a guy who works in a bank, he can explain to you how a bank works. I've got a friend who does, he's a medical products investor, pharmaceutical investor, and he was doing pharmaceutical sales for many years. Then he worked as an analyst at Jefferies. So for anything medical related, I always ask him, does this drug work? What do you think of that vaccine or whatever? So it's your social network and your friends, you just ask them. And more often than not, they'll be very happy to tell you what they do for a living and, try to understand their business. Yeah.
Right. Besides talking to our friends who are in other industries, what is your view on reading into the financial statement these companies publish, or even going through their website, try to follow their news, etc.
Yeah, I mean, it's a good, I mean, the standards, transparency standards have gone up. I mean, when I started as an analyst in 1995, whom I shall not mention, a lot of things were only done on the Bloomberg, it was very expensive in those days, my God. Still expensive today, still expensive today.
Mhm.
And then a lot of information was by fax, you know.
Yeah.
And then if you could process, if you get a copy of the fax and process the information before 9:30, you win, right? But now with your cell phone, all these investing apps, you're on top of everything instantaneously. So it's a lot easier to trade and to be a stockbroker today than say, 30 years ago.
Yeah, you mentioned about stock apps, right? What are some of the apps that you subscribe to or you're using to get some information about these companies which you're looking at?
I
What are
mean,
some of the good sources?
well, my associate way back in UBS, this is like 9 years ago, she was using this thing called AA stocks. So I just use it, AA stocks, it's quite easy. The interface is quite easy. They give you about 30 live codes.
Mhm.
I mean, if your brain can handle more than 30 live codes, then congratulations, you're probably very rich anyway. But 30 live codes is more than enough. And then some people use Futu, but Futu, the
Right.
interface is in Chinese characters mainly. So
Mhm.
um, I mean, it all depends, right? I mean, some people think green in China, green is down and red is up, and in the West, red is down and green is up. I prefer green is up
Mm.
rather than red is up, so it's less confusing for me. But it all depends on you. I mean, if you trade with interactive brokers, HSBC, they all have their own live prices. But
Mhm.
AA stocks, you don't have to trade with them to use their app. So even though I have a HSBC account, I like to use AA stocks because it's just an easier interface. Yeah.
Mhm. Right. So you mentioned about, yeah, just a quick summary. You have mentioned about EA stocks, Futu, interactive brokers, HSBC, live trading. Yeah. So these are some of the places that our participants can start looking at to get some stock ideas or even like start trading. So we mentioned about, we talked about, financial statements of company, right? So there are many figures, many information in some of these financial statements. So what are some of the key figures that you would advise us to look at? Because at the start of your presentation, you mentioned about PE ratio, right? So what are some other key figures that we could look at to understand, how this company is doing?
Okay, I think the first thing you look to is net profit. I mean, the company's making money or losing money. That's probably the most basic. Then I like to look at the debt levels. If the company owes the bank $3 billion and they're not making money, then it's not a good sign.
Mm-hmm.
Cash level is very important. If you owe the bank 3 billion, but you have 10 billion cash, congratulations, So it all depends on your debt and your cash levels. Operating cash is very important. How much cash you get from your operations. And then revenue is always very important, right? If your company is growing, if the revenue is expanding, that's always a good sign, you know?
Mm.
And then, yeah, these are very basic things you want to look at.
All right. Yeah. So you mentioned about net profit, looking at the debt, cash level, operating cash, and revenue in a company, right? I think there are many beginners among our audience in investing. So some of them ask, what are the very first step that I could take before getting into investing? Like what are some of the steps that people could take before they start investing?
Well, the first things first is how much money you want to put aside. Let's say 10,000 Hong Kong, for example. Okay. Then the next question is how much money you're prepared to lose, right? If you're prepared to lose 2,000, then you buy a certain stock. If you're prepared to lose it all, then we can always go to Macau when it opens. No, just kidding. If you're prepared to lose it all, then you buy a different type of stock. Then the next question is, do you want to buy a index or do you want to buy a stock? It depends, right? If you think the economy is doing really good and everything's going to go up, yeah, buy the index. But that would be something for 2017. Today is 2021. Or maybe 2020 when the world was ending because of the virus. You can buy the index thinking it will recover, and it did, right? So an index is you only buy an index when the direction is very clear, right? 2017, life is good, You should have graduated in 2017 because 18, 19 were very good years, right? 2020, my God, right? And then if everything is halved from 2019, you say, you know what, I'll buy the index because it couldn't get any worse from here. Governments are printing money, it's going to get better as you buy the index, right? You buy individual stocks. Sometimes stocks are very hot, very, very hot for 6 months. Like auto stocks are very hot for 6 months. Good example is this stock called Wuling Motors. I mean, I call it a very scary stock. It went from $2, 150 to $4, and it's now at $2. I mean, that's a scary stock. Why? Because they sell a little type of EV, and they sell 40,000 units a month, and Tesla only sells 20,000 units in China. How long is this EV going to last? I don't know. I'm not a car expert, right? But if it lasts for 2 years, at some stage, $2 is a fair price. That's an example of a stock that has a huge gyration, right? But that's how, if you really want to make some serious profit, you got to take some serious risk. Okay. I mean, every now and then you might be able to get a 10 cent, but that's very difficult. Okay, let's see. Question. We as a student won't know what good is for a company. 10 million would be a lot for a restaurant, but not much for a bank. That is correct. So what you do is you look at the total asset base of the company. If the company's asset base is 200 million, if they can make 10, 20 million, 10% of the asset base, that's a good number, right? If your asset base is 2 billion, you need to be making 200 million. So what you make is relative to your asset base, yeah? Your scale of business, how much capital you put to work. You find that in life, in economics, it's all about capital. If you put more capital, your capital is going to be generating a return. If I put 200 million and I get 20 million, I win because 10% is a very good number, right? Most people get single digit capital appreciation, 2-3%. So I put in 200 million, I make 6. Okay, that's not a good number, but it does happen quite common, yeah? Okay.
Right. So it sounds like the magic figure here is 10% of the asset.
Yep,
Is
10%.
that
Yep.
is that true for all the industries? Or
It depends on your risk profile again, right? Because I mean, Costco, okay, Costco shipping, for the first quarter of this year, they made 2 billion US dollars. It's not even RMB, it's not ringgit, it's US dollars, in 3 months. I mean, that's just crazy. I mean, seriously, what business makes $2 billion in 3 months, right? I mean, don't get me wrong, the capital is huge. They put in like 30 billion, okay, so fair enough, okay? But the point is, because of your shipping rates are so high and everybody's so desperate, there are no alternatives. So therefore, they make 2 billion. They're probably going to make 3 billion in the next quarter, right? Then the real question as an investor, you've got to figure out, is this 2 billion going to keep going for a year, 2 years, 3 years, right? And that's a very difficult question. There are proper professionals who will answer this question for you, right? But that's the type of thinking and skill sets you would need to try to make money in the stock market, right? You've got to look for an event that nobody expected. And the answer is very difficult because if you watch NBA, right, for example, if you watch this morning's games, the stadiums are full. Stadiums are full, right?
Mhm.
So everybody's not wearing a mask, they're vaccinated, they don't care, right? So their rate of economic recovery in the US would be different from, say, Taiwan, which is in big trouble right now, right? So it all depends, you see. So if you want to be full-time, not full-time, but you want to try to understand the stock that you buy, you have to do a lot of homework. So maybe sometimes buying an index is easier. So if the economy goes up, at least your wealth goes up with the economy. Yeah.
Okay. Yeah, going back to the previous question about, what are some of the steps that students can take, I think just to give a brief summary is basically, before you get into investing, you should first put aside, some money that you're willing to risk. Um, secondly, if your risk profile is, not high, then you might want to look into index fund instead of individual stocks, which you have to follow all the time depending on the industry. Tech is a bit more volatile as well as the medical industries. And then you have to try to understand. Thirdly, you have to try to understand the company that you are trying to buy, their stock that you're trying to buy. For example, asking your friends who are also in that industry, or trying to search up their financial statement, try to look at some of the index, some of the parameters that Mr. Ghee has mentioned, such as the net profit, revenue, debt, cash level, etc. So moving on to another question is about index fund essentially. So some people have asked about Hang Seng index fund. I'm not sure if you are familiar with that, but the question essentially is what fundamental factors are limiting the growth of Hang Seng index relative to American indexes?
Hang Seng doesn't have as many tech companies as the American indexes. That's one problem because with a tech company, your growth can be huge, right? So you got Tencent, I mean Alibaba, that kind of helps, right? But the Hang Seng index is a more traditional index. So like a Nasdaq, if you got a few good tech companies, I mean there are millions of US companies doing new apps that I have no idea what they're doing, or crypto or whatever, I mean, crypto is a different story altogether. I got a friend who's running a crypto trading startup. If you want to know crypto, I'll get him in, he can give you how it works, he's great. I trust him, right? Then the other issue, Pui Min, before I forget, before you buy index fund, is called the minimum lot size. This is very important for a lot of beginners, minimum lot size. And let me explain, okay? So if you want to buy an auto company, right? Okay, I want to buy an auto company. Big problem. Because BYD, the share price of BYD is 215 Hong Kong dollars. Okay? Which is a lot of money. 215 Hong Kong dollars is not small. I got even better, worse news. The minimum lot for BYD is 500 shares. So even before you buy a single unit of BYD, you need to have 100,000 Hong Kong lying around. So you can't buy BYD, right? So it gets very difficult. Okay. The US, you can buy up to one share, but it gets very, very difficult because you got to find a pool and then they will charge you, and then it's a lot of work. Okay. Certain shares, so for example, a shipping stock, Costco 1919, the minimum lot is 500 shares and the share price is 19, right? So you need about nearly 10,000 Hong Kong dollars, which is okay, it's better than 100, right? And then it depends on your minimum lot. Sometimes some minimum lots are 200 shares, some minimum lot 400 shares. So that's also a big factor to factor in your consideration, right? Buying an also has index fund also has a minimum lot, and if the minimum lot's so expensive, you can't, right? I mean, not everybody's Warren Buffett, right?
Mhm.
So the minimum lot is also another big consideration for you to start off in investing. Yeah. Let's see.
Right. Thank you for this. I think from the chat box itself, there is a question regarding first time investment in Hong Kong stock or US stock. So, what's your opinion? Looking at US or Hong Kong, which one's better?
One
What
of
should
my
we look out
friends,
for?
my professional trading buddy, he loves the US market because he says that transparency is very high. Everybody knows what's going on, but he doesn't sleep. He cannot sleep because he's watching the markets from 9:30 onwards until 4 in the morning. So you can't sleep, right?
Mhm.
So that's a problem. Um, I don't like to buy US stocks because of tax implications. I don't like to deal with that if I can avoid it. I just think that I live in Asia, I live in Hong Kong. It's easier for me to understand something in Asia than something in the US, or at least I would know more about things in Asia than things in the US relative to myself. So I'm more comfortable to buy something in Hong Kong than the US. What's a good first time investment? Oh my goodness. Um, I mean, difficult, right? I mean, if you want something that's really hot for the next 6 months, you can buy a shipping stock, right? Because this thing is going to continue. So long as the virus continues, this thing is more likely than not you're going to make money on that. Yeah.
Mhm. Okay.
You can buy a tech stock, but you can buy Tencent, but then the Tencent you have the minimum lot problem because the share price is 598 and the minimum lot's $100. So you need to put in 60,000 to buy one lot of Tencent. So some of these tech companies, you have a problem of the minimum lot. That's why the minimum lot is a big problem with respect to retail investing as well. Yeah.
Right. Just now you mentioned about transparency of the Hong Kong stock is a bit lower than US stock. What exactly do you mean by that?
Well, in Hong Kong, I'm for my NGO. I'm doing some work on Huaneng Power, and you see this very common on the Hong Kong Stock Exchange website. An announcement has just been made in Chinese on this website. Please refer to it. So unless you're a Confucian scholar, or you did your high school in Taiwan, I mean, good luck, right? So that's one issue with Hong Kong and China stocks, right? Not everything is available in English.
I see.
Okay.
Okay. It's like a translation issue.
No, their skill sets are different, right? Because a lot of these companies are China companies, and they make a China-related investment, and they just announce it in Mandarin, and they assume that your Mandarin's great. So
Okay, I see. Understand. Um, there is also another question about different investing styles. So some people ask about your view on long-term and short-term investing.
okay, so there's two sort of styles. One is value, one is growth, and they're always arguing about this for the longest time.
Right.
So a value stock is you buy a company you understand. Let's say Sasa. I understand Sasa, right? And Sasa is trading at, say, net asset. Okay, so I buy Sasa at 3 times earnings or whatever. I wait. One day Sasa will get to 8 times earnings, right? And the earnings go up because tourists come back, right? So that is a value investing sort of example. A growth example is you buy a tech company that's losing money, but because they're getting a lot of eyeballs, so you invent a payment app, and then everybody wants to use a payment app, right? Or you invent Kuaishou, Kuaishou is the biggest competitor to Douyin, right? So you buy Kuaishou and, it's losing money hand over fist, right? But one day, when they start making money, congratulations, right? So, but I mean, you probably have to sell. I mean, Kuaishou also, you have the same problem I talked about a minimum lot problem because Kuaishou is 200 Hong Kong dollars. It used to be 400, and the minimum lot's 100 shares, right? So, I mean, if you got 20,000 to throw around, why not, right? But and then you go back to the whole BYD problem, because one lot of BYD is 100,000 Hong Kong dollars. So not anybody can buy a BYD stock unless you go on margin, right? But that's a different story altogether.
And what are some of the pros and cons about value investing and growth investing? What are some of the advantage, disadvantage
Growth
with these two
investing. Okay,
methods?
so there are two types to look at a stock. Some guy says, "Hey, this stock went from 13 to $2. I'm going to buy at $2, and it's going to get better." So that's a value stock, right? The growth guy says, "I'm not buying something that's falling down. I'm going to buy something that's going up, because you know the falling down stock could stay falling down for the rest of my life, right?" So if this stock, like Costco, it goes from 10 to 12, 12 to 14, 14 to 16, 16 to 19. I buy at 12, I sell at 15. I don't care, because the chart is going up. I'm going to chase and run. So,
Mm.
so a momentum guy would buy a stock that's hot and sell it when it's hotter. So you buy high and sell higher. That's the strategy for momentum guy. Sometimes you pick the wrong time. The stock is, you buy high and it collapses, and have a nice life.
So how do you know when is the stock, let's say if it's down, how do you know that it's going to go up in the future? Or if it's going up, how do you know after you bought it, it's not going to come down?
It's to do with years of experience in investing. Yeah.
Right.
You've seen, I mean, what I was an analyst for 25 years, right? So there's nothing I haven't seen. I mean, I met some serious crooks. This guy went to jail. Okay, that's another story. We can save that for another seminar, right? But the real issue is that the real issue is you have to make a considered decision on the nature of the company, the nature of the business, and whether the business is going to make money. Okay, and professionals do this for a living, right? Analysts do this for a living, equity researchers do this for a living, fund managers do this for a living. So it's a very, very difficult question, and I can't easily explain it in a few minutes.
Mm.
But if it's something which, for example, let's say your family business is medicine, right? Then you know something about this drug that nobody knows, or your father knows something about this drug nobody knows about, then you can make a more considered opinion on that drug versus everybody else, right? So
Mm.
congratulations, right? So it's your own network, your own knowledge base, and yeah, and experience.
Okay. So we have a couple of questions coming in the chat box. So I think one question asks, a lot of companies running the business to business model with some low visibility or understanding among the retail investors' mind. Any idea we can understand these companies better? How do we increase,
It's
our
going to be hard.
understanding?
It's going to be hard because, I mean, there's a reason why the finance industry is so big in Hong Kong, right? Because people are doing work that is actually value adding. It's actually very valuable to try to figure out a lot of these questions. And they are paid a lot of money, and sometimes deservedly so. So that's why I like to buy businesses I understand, right? So I've been doing commodities 25 years. I understand commodities, right? I
Mhm.
know how I know how a gold mine, copper mine works. I know how an iron ore mine works. I know what are the dangers in the iron ore mine, so I'm happy to buy it. Somebody says, "Hey, go and buy Genting," and I'm like, I don't know anything about Genting. I know you gamble and people go and sing their concerts, but there are no concerts now, right? So yeah, so that's the problem. So for something that's quite esoteric, that is quite specialized, I would recommend you avoid it, because the amount of time you spend trying to understand it would actually kill, would not be worth your time, because you're not going to be throwing a lot of money at it, right? So I suggest you stick to something which is more easily accessible.
Right. A lot of the I think US companies, they have years of data. For example, those who are published, like they are publicly listed companies who have very long track record that we can trace back many years. I think maybe those are better for beginners because there are more information on the internet that you can read about. So there's another question, right? About asking you, do you think the current market is too optimistic? Um, in terms of the PE ratio for evaluation due to the higher expected future earning EPS, earning per share.
Okay, so here's the concept. Okay, last year when the virus hit, right, everybody couldn't understand how anybody could make money in the virus, unless you're doing the vaccine, right? Of course, okay, right, or you're selling gloves, right? Okay, so now when you say optimistic on EPS, I do agree. But then the real issue is, as an investor, you need to find out which sectors will be making money. Okay. And under what conditions, if the virus improves, if the virus does not improve, or if things stay the same. So you got to model all these things into your thought process. There's no one answer because it hasn't happened yet. Nobody knows the answer, right? So, for example, if tomorrow they open the border with Shenzhen, then anything retail with Chinese-driven food and beverage, whatever, hotels, whatever, those businesses will make money, right? But for the Chinese border to open, there's a lot of things to happen for it to open, right? So you have to take a view on what's going on in the world and then try to figure out what your view is and then how you proceed to look at who makes money. So let's talk about shipping, right? Because shipping is happening right now. Retail, hasn't happened yet because people are not coming to tourists in Hong Kong, right?
Mhm.
So shipping will happen. So shipping will keep going up so long as the US economy is recovering. People are spending in the US, which they are, right? And there's nobody building new ships to send the containers to the US, right? And there's only 5 or 6 ship, Maersk, you know, uh, Costco. There's only a few people who actually Nordic Lines. There are only a few people doing this right now, right? So therefore, that's something. If the virus continues to be so challenging, and lockdowns continue, then hey, shipping is going to keep going. It's like DHL, right? I mean, in April last year, DHL made crazy money. I tried to send something to my friend in Guam. It was practically impossible, right? So you got to think like that. And then what's really suffering? Cruise ships. I mean, who wants to go on a cruise, I mean, come on, right? So we've got to look at the way the world is and try to figure out who wins and who loses.
Okay, thank you. Um, is it possible for you to do like a quick case study on a company which you understand? So there's a question in the chat box asking for you to explain a stock which you understand and discuss the reasons why you chose it
Okay.
and what are the major factors that influence the price in the past
Sure,
and in the future.
sure. So IRC is an iron ore company. I did the IPO for it back in 2011. So I know this company very well. So when you build a mine, the mine doesn't happen. Doesn't happen. Okay. The mine has to be built. And when you build something, you need money. So either it's your money or it's somebody else's money, right? So these people, they put an IPO. In those days, we raised 250, 300. Then they borrowed 330 from a bank. And they spent about 800 million to build this mine. Okay. But what happens is the iron ore price went down. It went down a lot. So it was 190 in 2011 and it went down to about $60. So if your production cost is 60 and the price is 60, your mine is worth zero. In fact, your mine is worth negative because you owe the bank 300 million and you can't pay it back. So when did it all start changing? 2019. There was a dam disaster in Brazil, killed about 3,000 people. So Brazil had to close their mine. So they sent out 10% less iron ore. Iron ore price went up. This company managed to find a new bank to take on their debt. So they still owe the Russian bank 200 million US dollars. They used to owe a Chinese bank 320, but they managed to pay it down. So a good example of this is Fortescue Mines, FMG, in Australia. Um, when you build a mine and you owe the bank money, right? The mine belongs to the bank. It doesn't belong to you. That's why your share price is very low. The Fortescue share price was $2 because they owe the bank 9 billion, right? But every time the iron ore price stayed above $70, they could make money. And every time they kept paying down their debt, the share price kept going up. And that's why Fortescue today owes the bank 2 billion. They can pay off the debt anytime because iron ore price is so high. And the share price is $20 or 15 or whatever it is, right? So when you buy at 2, there's a lot of risks. And you buy at 10, there's less risk. And you buy at 15, obviously, you hope there's less risk, right? So there's an example. So IRC, their share price went up the other day because they said that they now have 75 million cash and they owe the bank 200. So if iron ore price stays up for the next 6 months, they could end up having over 130, 40 million cash and they can pay off the bank tomorrow, right? But the share price went down 40%, 30% one day because the Russian government said that their mine was illegal in some aspects and they're suing them. So when you buy a stock that's high risk, there's always things that will go wrong. So that's a stock example of a stock I understand, and there's an example of a stock I understand something can go wrong. So there you go.
So with regards to all these information that you have, right? How does it allow you to understand if the price of the stock is gonna go up or is it gonna come down? Because you mentioned that there's some fluctuation in between regards to mining stocks.
Yeah, I mean anything can go wrong, I mean another risk, it happened to the Indonesian stocks back in 2010. And it happens to any stock, right? If your mine is making a lot of money, the government wants to increase taxes. Why not? Right? Because you're on my tanah, you're on my land, right? So you're digging coal price goes up, hey, I want more. It's very normal. It happens all the time, right? So as an investor, you got to anticipate something will always go wrong. Because people are people, right? Human beings are human beings, right? If you're making too much Google, now people want to start collecting tax. Indonesia just told Amazon, to collect VAT, right? I mean, happens all the time, right? Yeah. So if everything is too good to be true, sometimes it is. It probably is. Yeah.
Your work focuses on mining stocks, right? Why did you got into mining stock instead of so many other industries?
Because my mother wanted to keep flying back to Singapore from Perth, so she stuck me in this one-horse town called Perth, and they only did mining in Perth back in the 80s, bro.
Oh, I see.
So that's the reason, right? So blame my parents, I mean, basically, I tell my children, your parents' decisions will always influence you. That's why I have no decisions. I don't tell my children do anything, man. Whatever they do is up to them, So I don't have to live with mining background. There you go, Marcos. Because my mom wanted me to send me to Perth. What to do. If she sent me to Sydney, I wouldn't be here. I'll be probably getting a high-paid job in Sydney. Living it up in Sydney. But she put me to Perth, and nothing happens in Perth. There was one Malaysian restaurant. There were two, Bibik Chan Nonya, which was always closed because they would close early, and Malaysian food. Two Malaysian restaurants, population 1 million, go figure, okay? You have to leave, no questions.
I see. Okay, what an interesting story that you're living in Perth and got into mining stocks. But if you get a chance to, would mining stocks be a choice of yours, or would you get into other industry in terms of analyzing these stocks?
It's all fated, Your life is predestined from day one. That's my belief. And as you get older, you would tend to believe this more than not, right? So I came to Hong Kong in 97 and all the mining stocks were doing IPO. So I participated in nearly every major mining IPO in Hong Kong. So I'm very grateful for that life experience, and I'm very grateful because when I came, I was one of the few people Mandarin speaking people who actually done a mining IPO, right? And then I just built on that and, it's become a hobby of mine, right? And life goes on, Sometimes it's good to specialize in something.
Yep. Well, some people ask about recent events of high fluctuating stocks. For example, I think everyone knows about GameStop, AMC Entertainment. So the question is, as a beginner, usually people are quite tempted to buy highly speculative stocks like GameStop, AMC Entertainment. What's your view on this?
Don't be greedy. There's my answer. Don't be greedy. Okay. And let me explain. So my dad was a stockbroker in Malaysia back in the 70s, 60s and 70s. And he always taught me one thing is always give the guy who buys the stock from you a chance. Okay? So you buy at 100, you sell at 123, it goes to 140. Don't go, oh my goodness, I should have sold at 130. No, don't. Okay? It's all karma. That's how the universe works. Okay? You sell at 123, the guy who buys at 123 has a chance to sell at 140. Everybody is fair. Because you bought at 90, you sell 123, you make $33. The guy sells 123, he sells 140, he makes $17. Okay? Don't say, hey, I buy a 90 and sell 140. Okay? Don't ever do that. Because if you do, you never sell, you always lose money, you'll be miserable. Right? You remember, I buy at 90, if I sell at 120, that was $30 I didn't have 2 months ago. Okay? So hey, you got $30. Congratulations. Lock the profit in, go and spend it. Take your friends out, go for a night out, get a vaccine, go to a bar. I don't know, don't care. Okay. You know, the money is yours, enjoy it. So if you buy AMC at 100 or whatever it is, if it goes to 140, you say, you know what? I'm going to take that $40 because that $40 wasn't there yesterday. So I'll take it. And you know what? The guy who buys it 140, if it goes to 200, he deserves the money because he gave me the 140 that I didn't have. I'm telling you right now, a lot of people cannot say what I just said. And even less people can do what I just did. Okay? And that's how life works. So
Right. So don't be greedy.
always give the other guy a chance, please. Because the universe is coming and it's going to come and bite you in the ass, right? So don't be so greedy. Oh, I buy a 90, I want to sell at the top of the chart. You sell on the way up, you took money that wasn't yours in the beginning. If you want to come back and play again, why not? Okay? But don't have the attitude that I have to sell at the top of the chart and buy at the bottom of the chart because you don't know when the chart bottoms and you don't know when it tops. Okay?
Yeah, you mentioned about understanding a company before you buy their stock, instead of buying these speculative stock. So some people ask about what's your common research workflow. So how do you do your research about a certain company? Yeah, how much information is sufficient for you to know, oh, this is the correct stock price that I'm gonna be buying it, and then maybe selling it later.
George Soros used to say something. He said, buy now and do the research later. That's what George Soros said.
Mhm.
Sometimes the stock starts moving up. By the time you finish your research, the stocks come down, right? Sometimes, you just get in and then you figure it out after you get in. Because opportunities come and go. We're not talking about a skilled profession here, okay? There is no time value of stocks. Please, okay? We're not like a mechanic, or a doctor or surgeon or lawyer. Every day I go to court, my value goes up. No such thing, okay? Stock market changes every day, all right? There's no time value of money. Please. I hold this stock for a year, I'm going to make money. If you hold it for a year, yes, you will be subject to more changes because instead of holding it for a month, because there'll be 11 months of changes you're not subject to, but changes can go up or down. And it's a very risk-taking venture. And a lot of people haven't made the adjustment yet because people always want to win and not have risks. It doesn't work that way. If you want returns, you take huge risks. That's how it works.
Yep. So take the opportunity to buy when the stock is at a good price. But if you were to understand the industry or the company a bit more, what are some of your steps that you're gonna take in terms of doing research to understand these companies?
You always buy stocks that are in different sectors. So some go up. So sometimes this stock goes up, that stock comes down, right? So for
Mm.
myself personally, I buy tech and commodity stocks. Tech stocks because I got a lot of friends who buy tech stocks. I talk to them. Commodity stocks because I understand commodity stocks, right? And you will find when commodity stock go up, tech goes down. When tech goes up, commodity comes down, right? And then sometimes I like to buy autos because autos is a big thing. Electric car is a big thing, right? So electric batteries is a big thing. So you buy different sectors, right? And then you feel a bit better about yourself because on a day when everything goes down, this one goes up, so you don't feel so bad. Do not buy stocks that are in the same sector and stick or have sectors that move the same way. Oh yeah, like retail, hospitality, entertainment, airlines, they move the same way, The virus came, they all collapsed because their business model finished, right? So you got to try to think out the box and buy stocks that are not closely correlated with each other, right? So tech and commodities are two different. I mean, they both can go down at the same time, but when they both go down, one will go down more than the other, right?
Mm.
And then most days, one will go up, one will come down. So you feel better about yourself because you're always in the game.
I see. So it's like a putting, your eggs in different basket
Yeah, of
so that it
course.
doesn't all crack together.
Yeah. And
Okay.
never buy all the things that have the same drivers. Like tourism driver, right? Buy luxury goods, luxury luxury properties, hotels, property. People coming to buy properties in Hong Kong. I mean, these are all the airline travel. These are all the same drivers. Okay, and once virus comes, all those drivers go south, and your portfolio goes south.
Right. I think there is a question in the chat box regarding what we talked about just now about GME and AMC. The person is asking, do you think shorting the stock is unfair to the company?
I don't like shorting stocks in general because I think there are easier ways to make money and there are nicer ways to make money than shorting stocks. You can do a synthetic short on interactive brokers on US stocks. You can't really short Asian stocks. And the best way to short a stock is to not buy, just keep the cash. Because when you short a stock, you're profiting at somebody's misery, and you want to give everybody a chance. It's a fair world, You want to be nasty, somebody's going to be nasty back. That's how life works, right? So shorting is actually very mean spirited. I personally would not do it, and a stock goes up, there's a reason why it goes up. Okay. And if you want to try to profit from the plunge, I mean, don't get me wrong. If there are some people who make a lot of money from shorts because sometimes the stock is just fake. It's a fake stock, right? So you deserve to make money from shorting it. But in general, shorting stocks is difficult. You don't have perfect information, and you're better off sometimes keeping your cash and going long.
Yeah, for people who are in the meeting but didn't know what shorting stocks mean, can you explain a bit about what shorting a stock?
So if a stock goes to say $200 and you say, hey, the stock's worth 140, right? So you there's a product on interactive brokers you buy called the short. So what you do is you borrow the stock from somebody who owns the stock, but he doesn't want to sell it, and then you pretend you own the stock and you sell it to the guy, right? But then the guy who loans you the stock will charge you 2-3%. And then when he wants the stock back, you have to buy in the market and give it back to him, right? So that's called shorting stocks. I mean, it's one way to make money, but mm, it's very tricky because then if everybody shorts a stock, then all of a sudden, when there's a recall on the stock, everybody has to buy the stock and the stock goes up. Yeah.
Okay, understand. So there's a since we have a lot of fresh graduates who are also in this workshop itself, they are asking, with the current market volatility, what advice would you give to fresh grads with limited capital to invest? Would you say maybe put away a percentage of your salary to invest? What's your advice on this?
Well, my advice is to take money that you are comfortable to risk. Okay. So if it's 10,000, it's 10,000.
All
And
right.
my advice is that if you buy a stock and it goes up 20%, sell it. Sell it, just sell it. The 2,000, you deserve it, and then you reinvest the 10,000 somewhere else. And you feel good about yourself, you know. You make money on the stock. Okay. So that's my advice. You put away 10,000, you buy one stock, the stock goes up 30%, you sell it. You take the 3,000, have a night on the town, send it to your family, whatever, that's fine. It's perfectly good, right? And then after that, you reinvest the 10,000 and look for the next opportunity.
Okay. In the chat box, Damien is asking, right? He said that I understand the industry generally uses exit multiples to model stock prices. Is calculating the intrinsic value through the growth model feasible in the market as well?
Well, you know what, Damien, I got the best advice to give you, okay? Sell when you're happy with the profit. That's all. There's no need about exit multiples. We don't need to complicate a very simple process. You buy at $10, it goes up to 20, sell, and then go and spend your $10. Enjoy it. Enjoy the fruits of your labor, right? And then come back again and buy back at 15, and go away from there.
Yeah. So at the beginning of your presentation, you mentioned about buy and hold strategy. So what's your view on this? You buy something. For example, you think that it's gonna be growing in the future. For example, Apple stock. Then you buy and you hold for a very long term, and then you sell it. Yeah. What's your view on buy and hold versus if it goes up, then you just sell the stock? What's the pros and cons
Buy and
between these?
hold works for one company a year. Okay. If you own 10 of these companies over 10 years, congratulations. So I don't think it's a very high probability event, and I'll say so as much. If you believe in buy and hold for 10 stocks, then I think you're off by 9 stocks. Okay.
Okay.
So I don't recommend it at all. I do not recommend buy and hold. I'll just come out right now and say I do not recommend buy and hold. No, I don't.
Okay. Yep.
Don't get me wrong. You can find that one stock. Okay, maybe 10 cent is that stock, right? You buy at 600, you go to 1,000. Congratulations. Okay, but that's one stock. One. Buy and hold stocks happen once a year, maybe twice a year, maybe. Okay,
So very rare.
it's very rare. It's a lot rarer today than it was, say, 20 years ago.
Okay, understand. Yep. There's a question in the chat box. Any idea if retail investor can buy option? If so, can you briefly explain where and how?
Options are ridiculous, okay, because options can go to zero. Stocks can't go to zero unless the company is fake, but options can go to zero. Okay, so I would not recommend options unless your cousin, or your family, somebody does derivatives, they can sit down and they explain this to you, please. Otherwise, I would never touch an option because option is basically a sophisticated bet. Okay, so let's say Costco, I write an option on Costco. Okay, I'll give you a buy option at say $18. Okay, so or $22. I give you a call option at $22 2 months from now. If the stock 2 months from now is $21, your $22 is worthless. It's just practically worthless. On a day of exercise price, it's $21. You don't exercise your option because you're $1 out of the market. Your option is worth zero. Okay? Nobody's going to exercise your option, right? So it's basically a sophisticated way to take a bet. And beginners should not do options because things can go to zero. I know you're prepared to lose your capital, and I like that. That's one way to make money. It's cool. I like that attitude. Never say die. Give it a go. But the problem is you could lose it to zero very shortly and very fast. Okay, so don't recommend options. Try not to do it. You can buy put options to defend your portfolio on the way down. Say I own 10 cent at 600, I buy a put at 550. So if it goes to 500, I only lose $10, 10%. But like I said, don't. If you're not doing this full time, you don't have to.
Right. Okay. Thank you. I think we have asked you, many many questions. With regards to stocks, including option also now that I think
How long is your average holding period? I like that question.
yeah you can go ahead to ask that question. Yeah.
One day. No, I'm just kidding. It depends, right? I mean, you buy it today at 16, it goes up to 19, you sell, man. I mean, you're not going to wait around until 20. So the holding period, it doesn't depend on me. It depends on the market, right? It depends on you. If you buy a certain stock, $7, it goes down to 6, then your holding pattern is very long, right? Because you're not going to sell at 6 if you buy at 7. But if you buy at 7 and suddenly it goes to 9, then of course your holding period is one day, right? Because it goes to 9. So you have to take a very flexible approach, right? If you make money, sell. Because that money wasn't yours in the first place, so you might as well take it, right? And if you make a wrong decision, you've got two choices. You can wait it or you take a loss. I don't recommend taking a loss if you can, because you've done a lot of homework to get to that position, right? And you believe in what you buy. So there's no point taking a loss unless, you really need the money. Then in the first place, then why are you playing with money that you don't need to play with? You know what I'm saying? So very complicated. It's all feedback loop.
Yeah, I think we have asked you many questions today. I'd like to just close this Q&A session, and it's coming to more or less the end of our workshop today. So I'd like to just quickly ask you the final question, to just summarize this workshop today, right? So what are some of the actionable steps that you would advise students who want to get into investing but are too afraid to do so?
Okay, first thing is figure out how much you want to put in the market. Okay, and let's say call it 10,000, 5,000, whatever you want to call it. Okay. Then after that, you figure out what businesses you like and you understand and you're comfortable buying. Maybe auto, maybe medical, maybe commodity, quite rarely. Retail, airlines, whatever. Okay. You find a theme that you're comfortable with, and then after that, you got to find a stock in that universe, right? And then you got to figure out the minimum lot. Okay. Now, for me, as a rule, I like to look at stocks with small minimum options because then I don't make a mistake, right? So if your minimum is 6,000, you can buy it 10 times, right? Then you can average out your price. But if you buy something that is minimum lot 100,000, then you got to be prepared to lose 20,000 very soon. You know what I'm saying? So these are considerations that must come into mind. Yeah. Buy something that you're happy to hold. Buy a business that either yourself or someone close to you understands, that you can pick up the phone and say, hey, bro, what's going on? WhatsApp them. And then if you make 30%, man, enjoy it. Please, please. The bank's not going to give you 30%.
Okay, just to quickly summarize what you mentioned. So allocate a sum of money that you're comfortable of putting at risk, right? Find an industry that you understand, and then from there find a stock that you also understand, a company stock that you understand, and then see if there's a minimum lot, and if you're not comfortable with the risk profile, choose a low minimum lot, and then finally, if you earn a profit from that, just sell the stock.
Yeah, yeah. And then look for the next one. And you feel good about yourself, right? So if I start up with 10,000, I buy, Costco, for example, 9,500. And then if it goes to $25, so I sell it at 12,500. I feel good about myself, right? And then if you want
Yeah.
to reinvest 12,500 into something else, and then you try. And there's no timing on when it goes to 12,500. I don't know, right? Because it's a stock market. Right? So when you go into a stock market, it's not a casino, but it's not a job. Okay, it's not a skill. It's not something. Hey, I show up today. I sit in my seat for 9 hours. I get paid. No, no, it doesn't work that way.
Yeah. Okay. Thank you for your sharing, Mr. Lee, today. With that, we hope that for the participants, we have given you a brief taste of the investment world. So we have a couple of series of workshops coming up next. So stay tuned to our emails and notifications. We hope that you have take away something from the workshop today. So thank you for your time. Thank you for attending. Thank you so much,
Thank you.
Mr. Lee. Thank you.